Stocks are trying to post a fourth straight day of gains in this wild week. The Dow's up about 1,000 points since Monday's sell-off lows, and it's the S&P's best week since mid-August. But what changes from the jobs report this morning, if anything? Let's welcome in Nancy Tengler, the Chief Investment Officer at Laffer Tengler Investments, and Gina Sanchez, who's Chantigo Global's CEO and CNBC contributor. We want kind of like a playbook, Nancy, for the next couple of months, if you want to call it that, incorporating the taper, whatever's going on with the economy here. What would you tell us?
I mean, I think the economy is in decent shape. We had the Atlanta Fed, as you know, come in and lower estimates for third quarter GDP to 1.3. All the while, the week before, we had Wall Street strategists upgrading estimates to 2022 earnings. That's a bit of a disconnect. Then we got the jobs report today, and it was disappointing on the headline. But when you dig in and you look at the revisions, June, July, and August were all revised up pretty significantly. So maybe the job picture isn't as bad as we thought, particularly given the fact that a lot of it was in government and education. So we think that the Fed probably stays on track for the November taper. Who knows? We think they're a little bit behind, and we're going to be watching earnings calls. How much discussion is centered around higher inflation, input costs, supply chain disruptions, because we're at peak earnings and peak margins, and that's a dangerous place to be. All
right, so let's circle back in a moment to some of your specific picks here. Gina, anything you would differ on in terms of that description of the environment that we're in, kind of generally strong, but with risks around profit margins in particular?
I completely agree with Nancy there. In fact, if anything, a lot of the fear of profit margins gave corporations a pass to actually pass pricing increases through to customers in ways that we haven't seen that kind of corporate pricing power in some time. And so we've actually seen corporate profit margins expanding, except now we're going to start to experience the real inflation in the form of wage inflation. And that's really when Nancy says that we're looking at peak profit margins, I think she's right. And I think that that's the phase we're going into now, which is where pricing matters for investors.
Who do you want to own, Gina? Does it have to be just this, as we often hear, the stocks with pricing power, any sector, or is it that you want to avoid entire areas like consumer staples, or maybe that's the place to be? I mean, where would you be in this environment?
Well, look, I think today is a perfect example of who gets hit. The Nasdaq is taking it more in the chin than the S&P, and we've seen that actually throughout kind of some of the volatility that we've seen, and that is just because those higher growth margins are relatively more expensive, and there are better places, better value to be purchased elsewhere in the market. And value actually reared its ugly head during this volatility. And I think that that's probably going to be a place to be until we get through tapering, until we get through the debt ceiling, which has just been put off, not finalized. And so there are lots of sources of volatility where you probably want to be in less expensive stocks.
Okay, and then Nancy, I know for you, and you guys have been trimming cyber stocks, Nancy, cybersecurity names that have been outperforming, but you still like Square. You've got ServiceNow and Chipotle. I mean, they're not cheap either.
No, they're not. But we're focused on pricing power. So Chipotle has demonstrated they have tremendous pricing power. They pivoted very well during COVID. It's up threefold from where we bought it. But we think you still want to own this stock in the coming years. But a name like Square, with their recent partnership with TikTok, that is a company that's disrupting at an accelerating pace. And so we like that name a lot. And we would say to investors, be patient. Don't chase it. You will get pullback, and you will have an opportunity to get in there. But this is a stock you put away for the next 10 years, I think. And so we're barbelled between value, sort of some of the cyclical value names we added to materials and industrials and energy during the summer when these things got hammered. And we had been adding to technology in the spring when those stocks were being punished. So we have a barbell really with an overweight in technology and then those previous sectors that I mentioned.
All right. So again, some sort of specific ways to maybe look to navigate the next couple of months. Thank you both today, Nancy Tengler and Gina Sanchez. We appreciate it.